No, I'm just going to start the live stream.
Does that mean we've now started?
Yeah.
It's always good to know. Hi, everyone, and welcome to the next instalment of our regular economics panel. I'm joined today by two of our hardy perennials, Ben Chu from the BBC and Jonathan Portes from here at King's College. Also delighted today to be joined by Jill Rutter of UK and Changing Europe and the Institute for Government. And we are just waiting for Gemma to arrive. But while we're waiting for, well, two things. Let me make an announcement first. In the Slido, you will see right at the very top from UK and Changing Europe a link to a conference that we are holding on the 27th of April that Jonathan is organising on what have we learned about economics over the course of the last few years. We've got a stellar lineup of economists coming and presenting their work. If you follow that link through, you'll be able to sign up for that, which is both in-person and, I was going to say in-person and hybrid, in-person and virtual, so therefore hybrid. But we hope to see as many of you as possible at that event. But just to kick us off with a sort of traditional softball question that I like, what did you make of the spring statement? And let's start with Jill.
That I didn't expect. I thought it would come after the real economists. I thought it was actually quite a bad outing for Rishi Sunak. Rishi Sunak first sort of broke into public consciousness within weeks of becoming Chancellor with his whatever it takes moment on furlough. I think that probably surprised people with how much he sort of stepped in and was prepared to put the if you like, the sort of wherewithal of the state behind protecting people. And I think the real problem for the Chancellor was that last week, he just didn't really live up to the moment. You had all these headlines about the imminent cost of living crisis, the energy cap, soaring inflation, and he did various things. First, he'd already sort of shot quite a lot of his energy package back in February. So he'd given away that £9 billion then, so he couldn't really repeat that. So that was in a sense discounted. But his measures, looked too nitpicking on the energy side. And the real faux pas, I think, was that although he offered some relief for people in work, not least from his NIC increase that he'd announced last September, he didn't actually offer anything to people not in work, and that was a real problem when those are people on benefits, suffering from quite a low up rating because of the way the up rating system works. And he just didn't sort of come to that and didn't seem to really dawn on him that this was going to be a problem. So I thought he fell rather short of expectation. And then at the end, I think he really did himself a huge disservice by producing this, when Gemma comes, Gemma will say, this really sort of disappointingly thin so-called tax plan, which just gave him a sort of excuse to say, and in the longer term, I'm going to cut income tax, apart from the fact that it's terrible tax policy to decide you're going to increase the rate of national insurance contributions, which is a bad income tax, and lower personal income tax, actually, as things go, a good income tax. Apart from that, it looked as though he was just interested, not in helping people now, but in holding back in order to play politics in the future. And I think that gave the whole thing a sort of rather petty undertone, looked like he was playing politics, when many people are really worried about how they're going to get through the next few months.
Thanks. I want to come back to that point, actually, might do later. I mean, I know you're economist rather than political scientist, but the utter transparency of that as a sort of political gambit, I just wonder whether it will backfire because it is just so transparent. But anyway, Ben, over to you.
Thanks, Anand. I found it quite a confusing fiscal statement, and it left me feeling confused, that's to say, about where Sunak is coming from politically and economically, actually. You remember after the spending review last year, he surprised us, certainly surprised me, with his willingness to spend more on public services, which was against the expectations going into it. And I think in this one, he's surprised with his refusal to spend more on uprating benefits, i.e. keeping pace with inflation. That was the big surprise for, I think, a lot of people. Now, so why did he make those choices? I think, one view, and we had it on Newsnight from one of our contributors, is that it's ideological, right? He's happy to see benefit claimants' incomes hit because he instinctively doesn't like welfare from a sort of ideological view. And this sort of puts him in the style of George Osborne with his benefit cuts, and perhaps Thatcher as well. But I think it's actually a bit more complicated than that, because if you take a step back and actually look at the numbers, you don't see a classic Thatcherite, or maybe it's a caricature, but a classic tax-cutting Thatcherite agenda there. As the OBR made clear, the tax burden as a share of GDP is rising, and it's actually rising faster as a share of GDP than it was last October. Very key point that. And on personal taxes, which of course he was trying to sort of say that he's a personal tax cutter, or will hope to be a personal tax cutter, in 2024, if you look at the numbers there, the fiscal drag from higher inflation is more than offsetting the rate cuts and the threshold increases in NICs that he's put in place. So, that's what the numbers show you rather than what the rhetoric shows you, and that belies the idea that he is a tax cutter. Obviously, big point is that how deliberate is that fiscal drag? I think you should view it as a policy, because if not uprating benefits in line with expected inflation is a policy choice, as a lot of people have, I think, reasonably been saying it is, I think allowing fiscal drag to do what it does, i.e. raise more in tax revenues, put people in higher rate tax brackets, that's a policy choice as well. I think you have to, what's good for the goose is good for the gander. So he made two policy choices there, not just one. And in terms of the active measures that he's taken, it's interesting as well. I don't think it's a clear-cut case of ideology. I think the national insurance rate rise in particular, these are progressive. They do hit people higher up the income spectrum than lower down. The better off will pay more as a share of their income as a result of that. And so I think crucially, and this sometimes gets a bit lost, the crucial thing is that he's not so much shielding the rich in terms of his policy measures, the better off, but it's more that he didn't do more to help those, as Jill said, lower down the income spectrum, particularly given the extra fiscal leeway, that the windfall, if you like, that the OBR gave it in terms of its extra tax revenue forecasts. And I think that's quite an important distinction to make. So what sort of Chancellor is he? Where is he coming from? I think, for me, the picture has been more muddied than clarified by this spring statement. So I come out of it, as I say, a bit more confused than I was going in.
Wonderful, thanks. Hi, Gemma.
Hello.
I'll let you get settled for a minute, and we'll tell. But the starter for 10 is, what did you make of the spring statement? And we've heard from Jill, we've heard from Ben. I'll turn to Jonathan next, so you can sort of get settled, and I'll turn to you after that, if that's okay.
Yes, that's fine. Sorry, for some reason my sound is incredibly quiet on Zoom, so I can just about hear you, but I don't know why this. I had it in a previous Zoom meeting earlier in the week, and I haven't quite managed to figure out the problem. Sorry about that. Okay.
Well, if necessary, if you're really struggling, I can stick what my question is in the chat.
Okay.
Can I just remind the audience to please put your questions in the Slido, to please vote for the ones we want me to ask. There are a lot of very interesting general questions here, particularly I think the question on Northern Ireland is interesting, but bear in mind it's an economics panel and the expertise here is economics rather than necessarily Northern Ireland. So just bear that in mind when posing your questions. Jonathan.
Thanks. I mean, I think Jill and Ben have well covered the sort of specific announcements about tax and benefits. So perhaps I'll try and sort of take a step back and take a sort of slightly wider or longer view as to what this government is about in terms of economic policy. What are the big debates? It's quite interesting that a few weeks ago, the Chancellor gave what's called the Mays Lecture, which is a sort of annual set-piece lecture on the sort of broad economic vision. So famously, Nigel Lawson's 1983 Mays Lecture set the sort of basic framework of UK economic policy. certainly for 15 years in some respects, arguably for 30 years. And this was Sunak's attempt to set up his stall. And it was quite well received. It was generally regarded as being a thoughtful exposition of what, some version of a social market economy looked like in the 2020s, with a particular, adopting parts of the Lawson consensus on, focus on macro stability, supply side, but with this sort of extra layer of the need to promote and support innovation, both through, good regulation rather than less regulation, and proactive state support in some areas, in particular to address the UK's long-standing problem of inadequate business investment and inadequate investment in getting from sort of basic science to innovation to actual better products and services. And so what was there? How did the spring statement set out how that was going to be translated into actual economic policy? Well, answer, not at all. And in fact, as Jill says, we've had perhaps 15 years at least of chancellors making the tax system more complicated, not just raising the overall tax burden, as Ben said, but making the tax system more complicated, less logical, generally messier, more confused, the tax code longer. And this has done that again, frankly. The system is a mess. The switch from tax to national income tax, national insurance, as Jill said, is a retrograde one. The creation of the new health and social care levy, which is like national insurance but not quite, is even messier. So very little evidence that this, what looked like a good, solid, reasonably coherent Treasury speech is being translated into actual policy at all, on one side. And then on the other side, of course, what's the government's overall economic strategy? Well, we all know that it's leveling up. And as people have pointed out, the Chancellor didn't mention leveling up once in the entire prior statement. So I think, frankly, leaving aside the sort of distributional consequences, which Jill and Ben described, we still, have a disconnect between what the Chancellor says and what the Chancellor does, and a disconnect between what the government is supposed to be about and what the Treasury, which, as far as economic, social, and domestic policy goes, has to be the engine room of what any government is about. We have this disconnect between what the government says it's about and what the Treasury seems to think it's doing. So in that sense, we really get a sense of frankly, at best drift, at worst, as Jill said, some frankly pretty terrible measures as far as addressing what's actually happening to lower income households, but more generally a just sense of drift and incoherence.
It's interesting. I mean, I have to say, one of the lessons I've derived from the last few weeks is there really is only one politician who comes close to getting away with being all things to all people, and it's the Prime Minister. The Prime Minister manages to preside over a government that raised taxes and convince people that he's a tax-cutting Tory. I mean, all members of the cabinet who try a similar trick, like the Chancellor, get caught out. The Prime Minister just seems to be able to do it, though. But I don't know, maybe I've just been too easily taken in. Gemma.
Thank you, Anand, and huge apologies for joining late. I'll try my best not to repeat what's already been said, but apologies if I do, having not heard some of it. I think one of the things that struck me about the spring statement was that, in a way, the big story was really driven by what's going on in the macroeconomy, and particularly with inflation. And so a lot of the stories rightly coming out after the spring statement were about the huge hit to living standards expected this year, which is really driven by what's going on in the economy, and particularly with energy prices. And so perhaps more than usually, the discussion has been around things that were not of the Chancellor's making. But then the second part of that is, what did the Chancellor do in response to that? And I think in two areas, it was perhaps notable that the Chancellor didn't do as much as people were expecting him to do in response to the hit to living standards this year. One was on lower income households, where there was very little targeted support on that group, particularly for those who are not in work as opposed to low earners. And the other area was notably not a huge amount of support for businesses with high energy costs, which there are good reasons why the Chancellor may not have wished to do something there. But it's very nice, particularly if you contrast what the policies announced in the UK to what's been announced in continental Europe, that there really has been no support for businesses with high energy costs, either businesses in general or those that are most reliant on energy as an input into their production processes. And that could have implications for the sort of competitiveness of UK businesses compared to their European counterparts over the coming months. I was pretty excited in advance of the spring statement about the rumours that there might be a tax strategy coming out alongside the spring statement. What we actually got was deeply underwhelming. It was a document full of large font and pictures and not a lot of in the way of tax strategy. I mean, if anything, I think actually the element of strategy that was there around business tax was more strategic. It was the most strategic part of the document, in the sense of having some clear aims about wanting to boost investment in people, capital and ideas, but still quite a long way to go to turn that into a set of policies that would really boost UK investment in those things. And one thing that I think is a danger for the Treasury is the temptation to always reach for tax levers as a solution, and really to move the dial on productivity in the UK. I would hope that the Treasury is thinking more widely about the full range of policies the government has at its disposal, and whether tax is the right lever or whether spending programmes or different regulatory policies might be better. Where the tax strategy was totally lacking was on personal tax. There wasn't even anything close to a sort of statement of what the government wants to achieve on personal tax. And looking at the sets of tax policies that Rishi Sunak has announced, they don't show any clear sense of direction, for the reason that Jonathan was outlining, that we've had the government freezing the starting point for income tax and lowering the rate, but then on NICs we've had an increase in the starting point at which you start paying it, but raising the rate. Not clear why the government thinks it wants to shift the burden of tax onto employment income and away from other sources of income. So I think if the government is serious about having a strategy on tax in the UK, they need to start with a much clearer statement of what they're really trying to achieve with the personal tax system. And they've promised to review reliefs and allowances before the autumn budget, and I really hope to do that sensibly. They really do need to have a clearer statement of what they're trying to achieve and whether those reliefs and allowances contribute to that.
I have to say, Gemma, your comments about large font and pictures was an attack on the UK and a change in Europe's business model. Nothing at all wrong with either of those things in your written outputs. I mean, there are loads of questions, but actually there's one thing I just wanted to ask you. If I remember, I can't remember when we last met, but I just have the sense that we were relatively relaxed about inflation when we did. And I want to, I suppose this is to say, oh, you were wrong. This is to say, what changed, what went on, and B, let's have another go looking at inflation. You know, how long is this inflationary pressure going to be with us? How long are we going to be stuck with very high levels of inflation, and with what consequences? Jill, I suppose you're exempt unless you want to come in, as you weren't there last time. Who wants to? Ben.
Well, I'll cough Anand to being someone who predicted that one of the things that wouldn't happen this year is that the inflationary tiger would not tear our throat out as had been threatened. This was last year, not the last meeting. But yes, I made that prediction. It's not worked out entirely to my advantage. But I will say this, that if you're defining inflation as a jump up in the price level, then clearly that's happened. What I don't think we're still quite seeing yet although I think reasonable people can argue differently. I don't think we're quite seeing yet it being driven by excessive demand in the UK economy. I think it's still coming mainly from the numbers that I look at, from imported inflation, from energy and goods prices, rather than an overheating economy as such. I don't think the evidence is particularly strong for that. And I also don't quite yet see inflationary expectations taking off to the extent that some people argue they are. I think they seem pretty well anchored. Now, you can say that's because the Bank of England is now signalled that it's going to raise interest rates at a reasonably rapid pace. And that's what's changed. But I think I still don't totally buy into the idea that inflation has set in and become a domestic problem rather than an imported problem. And I don't buy that it's something that the Bank of England is so far behind the curve on and should necessarily have been raising rates much quicker last year, as some were urging. So that's my mea culpa and my attempt to exculpate myself a little bit on that bad call last year.
Thank you. I mean, the one thing I would add for the others is to what extent there is a domestic driver of this in terms of labour shortages, wage inflation, and if you really want to what extent is that at all due to Brexit? But who wants to come in next? Well, no one likes this one. Gemma.
Have a go. So yes, inflation has clearly been much more of a problem and is going to be much more a problem than we were expecting last time we spoke. In a way, I think that's because some things have changed. We had the Russian invasion of Ukraine, which has driven energy prices up that much more than we were expecting. So genuinely new events that we hadn't expected. Some things perhaps been longer lasting issues than we thought at the time, which maybe should have been predictable. So some of the sort of global supply chain issues have maybe been a bit longer lasting, but perhaps we should have known that because, for example, China has extremely tight restrictions in place and have a tendency to shut down activity if there's an outbreak. I would agree with Ben, and we may both be hopefully, I hope we don't get proved wrong, but we may get proved wrong. I would agree with Ben that at the moment it does seem like this could still be a one-off increase in prices because of some clearly identifiable global shocks, and not yet seeing evidence that it's definitely feeding through into a sort of spiral of wages and prices in the UK. I'd be very interested to hear Jonathan's thoughts on the labour markets. I know he will know that a lot better than I do, but that's clearly is a key risk, is the labour market does already look reasonably tight, and certainly we do know that people have dropped out of the labour market as a result of the pandemic, and if those people don't come back, then that will make the labour market that much tighter and risk that this inflation starts to get baked into wage settlements.
So I don't remember exactly what I said last time, but I can find what I said to the Financial Times exactly 3 months ago, which is, quote, "The key factors driving inflation higher are energy prices and supply chain issues associated with reopening. There is as yet little or no evidence of a wage price spiral or persistent excess demand for goods and services. So I would expect inflation to fall quite sharply over the year." While we probably did underplay the extent of it last time, I still think that's broadly right. I mean, yes, Ukraine has made that worse, and no one, or at least no economist, can reasonably be criticized for not forecasting what happened in Ukraine. So I think I agree with Gemma and Ben. This is, as far as we can tell, what's going on here is primarily cost push inflation from energy prices mostly, and supply chain issues secondarily. Given how tight labor markets are, as Gemma said, wage is, if anything, are not performing particularly well, I would say. We are seeing wages rise relatively fast in nominal terms, but at the moment they still seem to be falling in real terms. So it's not obvious that there is this sort of wage price spiral or labor market driven inflation as yet. Wages seem to be following rather than leading inflation, certainly given the tightness of labor markets. And we're not seeing that, sectors that have been particularly affected by, for example, reductions in EU migration have seen huge wage rises. We're not really seeing that as yet. So while it's early days, I would still bet on, as I did say before Ukraine in January, that inflation will have fallen back quite sharply by not in the annual figures, because the April and October price rises will still be in the own figures, but in terms of what's happening month to month, that by the second half of the year we'll see the rate of the growth in the price level falling back quite sharply.
Jonathan, as we were discussing, I think this week or last, with 1 million vacancies out there, with real terms wage decreases for many public sector workers, do you think retention might become a significant problem in areas like perhaps nursing or teaching, and actually those problems await us down the line as a result?
Yes, and this is one area where we are seeing a significant impact of the new migration system. Actually, is we're seeing a very sharp rise in recruitment from or we seem to be in recruitment from abroad to the NHS and social care. Or the NHS in the figures we've seen now that the government's made this change on visas for social care, quite possibly in social care. So the Prime Minister boasted a few weeks ago how he'd promised 50,000 new nurses net, or not 50,000 new nurses, but a net increase in 50,000 in number of nurses, and we've already got a net increase of 27,000. That's true. But those nurses, for the majority of those net new nurses, are not British. They're from the India and Philippines mostly. And I suspect we may end up getting more of that. So we are going to end up filling some of these gaps in the public sector workforce where the new immigration system allows it, we'll fill it through migration. Where the new immigration system doesn't, or where it's harder for, because of the nature of the job to get people from outside, in particular education, I think there's a real risk that the education system is going to be in big trouble this year, frankly, because at the moment, what is programmed are these very large real-term pay cuts for people who, because of the high level of vacancies in the private sector, will have other options. And that was the sort of big thing that didn't happen in the statement, was that the Chancellor hasn't done anything to protect the public sector against the impact of rising prices. And that's going to put pretty serious pressure on public sector pay, public sector workforce, and the quality of public sector services.
Jill.
I just wanted to say that one of the things that I think is quite interesting is in some quite low paid sectors that are suffering from a lack of labour, there seems to be a bit of a sort of supply response. You've seen some reports that, hospitality outfits that can't get the staff are actually reducing opening hours. So there's a bit of a sort of, lack of availability there. And I think one of the really interesting sectors, you're not going to get loads of nurses, lots of teachers flocking into agriculture. It's very low paid. We've had attempts to pick for Britain during the pandemic when we didn't get the usual dependence on that. Very highly dependent on migrant labour, very dependent actually on labour from Ukraine, which had really substituted big time for Eastern European workers when it ceased to become a really good deal to come over if you were from Poland. So quite dependent on Ukrainian labour. And I think the real risk there is that quite a lot of farmers will decide it's just not effective to plant their fields because you can't get the people to pick them. So why would you invest, particularly when your input costs are going up? So I think that's something to watch down the line to see whether that adds to pressures that we get sort of some patchy supply glitches there.
Okay, interesting. We've got a question from Alison Miller that I'm going to pose to Jonathan first, partly because there was about a 12-hour period last week when I thought I was doing question time. So Jonathan gave me a tutorial, and this is one of the things he explained to me, and I don't think I got it quite right, so we're going to try again. And the question is, how will the interest rate rises impact on servicing the UK's national debt? I understand the servicing of debt will be 83 billion this year in interest. You're muted, Jonathan. You remember doing this with me.
Yeah, I'm very glad you asked this question because this is really Treasury scaremongering at its worst, and most of the media has bought it hook, line and sinker. This idea that we're going to be writing a check for £83 billion in debt interest next year. That just isn't the case. It's an accounting fiction in some sense. So why is there this big increase in, quote, debt interest, unquote, next year? Well, the answer is because of the way the government or the ONS does the accounting for government debt. The portion of our debt which is index linked, that is the portion of our debt that's linked to inflation, that is uprated, it is increased in line with inflation. So when the government issued £100 index linked gilt, inflation goes up. So that gilt, the nominal value of that gilt, its face value now goes up to £108. And that's what we pay back when the gilt is redeemed. And for technical reasons, which I won't try and explain, the ONS counts that increase in the value of the gilt as debt interest, even though it isn't really interest and it is definitely not a payment. Nobody is writing a check for that 83, for the most of that, the increase in the debt interest payments for next year, that extra 30 billion or so. No one is writing a check for that. No payments will be made for that next year. They are increase uplifts in the nominal value of index-linked gilts, which come when those gilts finally mature. So that's an important point. And as I said, this idea that we're going to be spending more debt interest than we are on defense or whatever, it is, as I said, Treasury scaremongering amplified, sadly, by the media. The second point I'd say is that while nonetheless, it is a real money, it is a real increase in the value of those, or it's a nominal increase in the value of those gilts, but that just reflects inflation. And inflation in turn means that the actual nominal value of the economy is bigger. So overall, it turns out that inflation is good for the government finances. Over the long run, the debt to GDP ratio, which is all that really matters, whether the debt is sustainable, will be marginally better as a result of this inflation than it otherwise would have been. Why is that? Well, there's a number of things. One is that tax thresholds aren't fully indexed, so the non-indexation of tax thresholds means we get more tax revenue. One is simply, obviously, that inflation just increases the value, the cash value of what we spend, what we charge VAT, and all the rest of it. But this idea that inflation has somehow led to the government being much, in a debt crisis or much closer to a debt crisis than it was before, this is just absolutely flat wrong.
There you go, Alison. That I think counts as good news. Ben, did you want to come in?
Yeah, I just wanted to add to what Jonathan was saying, is that we know that the Chancellor, at least, and obviously the Treasury as well, understands this difference between an accruals increase in the deficit or borrowing or spending and a cash increase. Because at the Treasury Select Committee this week, he was at pains to point out that the increase in the increase in tax related to the changes to student loans was only an accruals increase benefiting the public finances, not a cash increase. But earlier in the session, he was pointing out, as Jonathan was saying, that we should be very frightened about the accruals increase in the interest, or what looks like an increase in the interest cost. So he understands the difference, and I think that that is worth noting, I think.
I won't accuse you of saying this, but I'm inferring from this there's a degree of deliberate manipulation going on here. But Gemma,
I couldn't possibly comment.
No, absolutely. I don't want to put words in your mouth, but my imperfect understanding led me there. Gemma or Jill, do either of you want to come in on this?
Only very briefly to say that there is a good reason we do accruals accounting, which is that it is right to take account of the liabilities that the government accrues, both what it owes to other people and what other people owe to it over time. And this is how businesses do accounting as well, for good reasons. So, and there are other areas of government public finance where you would think this is the right thing for government to do. For example, nuclear decommissioning, where we put aside an amount we kind of count an amount each year that we are going to have to pay to decommission our nuclear infrastructure in the future. So there are good reasons for doing this, but I totally agree with Ben and Jonathan that it matters how you're presenting it and what you're trying to convey as the kind of what you should be worried about depends on the answer to the question that you're asking, basically. And this is definitely not cash going out the door for the Treasury this year. So it's not a case of we suddenly need to raise this on the markets this year. And actually, my understanding is I think the government accidentally raised rather too much cash last year than it needed. So in a sense, the government is sort of a bit awash with cash at the moment. So certainly in terms of, does this mean we can't afford to pay our bills in the next financial year? That's not what this number tells you.
Okay, interesting. Got a question from Paul Whiteley, which is phrased sort of hints as a rhetorical question that I think Paul knows the answer to, which is, what are the prospects for dealing with the productivity slowdown given Brexit, COVID, and now the Ukraine war? I mean, moving beyond those specific factors, I mean, we've talked about, there's been a discussion about the need to address productivity, I mean, for decades now. Are there any signs that there are plans to try and do this? What are the prospects for doing so? What are the prospects for UK productivity going forward? Does anyone want to tackle any of those rather huge issues? I mean, one of you has to. Gemma.
I can start having about. I think this is the crucial question, and all the government's choices get an awful lot easier if you have strong productivity growth going on in the UK. Then you can be a government that both promises better public services and cuts taxes at the same time. And the reason the government's hands are tied is because growth is so sluggish and has been for a long time. Brexit clearly doesn't help by making trade harder with our biggest trading partners. In terms of what can we do about it, one feature of the UK is our sort of low level of business investment. Public sector investment has been a problem for a long time, but that's actually now going to be much higher over the next few years. So our public sector investment is no longer low, but business investment continues to be. So there is a real question for the Chancellor about what can he do to the policy environment to encourage businesses to invest more, and partly removing some of the economic uncertainty around our future trading relationships, but also some of the geopolitical uncertainty that there is would help to encourage businesses to invest more. But also back to Jonathan's point, I mean, one of this government's sort of apparent objectives is to try and improve productivity across the UK in areas of the country that have tended to lag in their productivity performance in the past. And I think it was noticeable in the Chancellor's statement that there was no mention, well, there was one mention of levelling up right at the end of his statement, but not really any evidence from the statement or the documents that this sort of question of thinking about the spatial impact of policy, which the levelling up white paper suggested should be hardwired into Whitehall. There was no evidence from the spring statement that had really been a consideration in the government's policies.
Any of the other three want to come in on productivity, Ben?
Yeah, absolutely agree with everything Gemma said. I'll just make a point. I was quite struck by the OBR's judgment that this downturn, this energy crisis, doesn't leave any long-term scarring on the UK economy in their central view. I mean, that's interesting because people talk about the US situation with inflation, and they talk about sort of immaculate disinflation, so they can have inflation come down without any slowdown in the economy, without any rise in unemployment. I think what the OBR is effectively presenting for the UK is a kind of immaculate energy crisis, at least in the medium and long term, that there will be no damage from this very, very hard period for many households, as we know. I'm not convinced that that's going to happen. I mean, just looking back to something Jonathan was saying before about inflation coming down, now, it could happen, and obviously we should hope it happens, but it is very easy to see a scenario where because of the war drags on and inflation, energy prices remain at this higher level rather than coming. And then arithmetically, that's going to lead to a longer period of high inflation in the UK than otherwise. If it doesn't go up, just remains higher than expected, doesn't come down, we get higher inflation for longer. And I noticed that the OBR was flagging this in their report, saying that that is the kind of thing where you would start to see potential scarring for the UK economy in the long term. A very long period of high inflation will damage our supply capacity. So I think that's something to worry. I mean, where does this fit into the question? I mean, it just makes it harder. If that materializes, everything that the government had to do to try and raise our productivity rate just becomes that bit more difficult, I'd say.
Jill.
I think it was quite interesting. Jonathan mentioned the Chancellor's May's lecture, and Gemma mentioned the tax plan being a bit stronger on business taxation than it is on personal taxation. And the Chancellor, has identified productivity as a problem. Very interesting, in his May's lecture, he actually admitted that Brexit uncertainty since 2016 had dampened business investment. And of course, you could say that the lingering rows over the Northern Ireland Protocol, hello, person who mentioned Northern Ireland, is having a further dampening effect potentially, because if you don't know if we're about to get into a trade war with the EU and be shut off or lose our tariff-free access to the single market, then you might say the UK looks a less good destination for investment, even if you thought we were still attractive, despite being detached or a distance compared to somewhere in the EU you might want to invest. But I think it's quite interesting that Chancellor did talk a bit about that, and he talked a bit about the structure of corporation taxes. One of the things that was really interesting about the May's lecture was, in a sense, it was a repudiation of what, as a former Treasury official, you regard as the best known ever May's lecture, which was the Nigel Lawson, I think 1984 May's lecture, where he set out his new approach to corporate taxes, which was low rates, no allowances. And the Chancellor seems to be going back, thinking he's giving us the higher rates. He's given us a temporary super deduction, but he seems to be trailing that he actually wants a sort of system that really incentivizes business to go much bigger on business investment, one of the issues he's identified. He's also trailed potential reforms to the apprenticeship levy, which is quite widely disliked in business, thought to miss its targets, as part of promoting skilling up the UK labour force. So it'd be interesting to see whether in the budget he actually comes forward with ideas on that. So there's a bit of a sense of that. And I think the really interesting question is, what is the impact of these shocks? Ben's talked about the sort of risks of negative scarring, which is undoubtedly there. But if you have sort of labour shortages, that should at the margin, she says, remembers undergraduate economics, because I'm a bit of a fraud on this panel, that should at the margin give you a bit more incentive if you can't get labour to think, can I invest in capital saving equipment? It might do something, I suppose, to euthanize a bit of the sort of long tail of businesses that have kept going and now become non-viable, and allow some of the capital to reallocate it out of that to better performing businesses. So I think it's really interesting how business react. And does the energy crisis finally get business to get sort of real about things like energy efficiency? I think that's a really interesting question. That was always a bit of a sort of third order issue, even when I worked for a company that had massive energy. The energy efficiency investment, even if it paid back really quickly, never made it through our capital rationing process to get up there compared to other things that had a more obvious direct effect on the share price. So I think some really interesting questions about, might some of this act as a bit of a spur towards productivity and help the Chancellor? I think he identified capital, ideas and skills as his big issues that he thought were crucial to tackling the productivity problems. So I don't know what the other better informed panelists think of that, and whether the Chancellor has a plan.
That was really interesting. It's a very specific question, but it's quite an interesting question. I don't know if none of you want to answer it, then fair enough. But we've got a question from Anonymous, which is stopping free COVID tests a false economy? And the issue there is whether people actually don't go back because they're not sure whether they have COVID or not. But does this make economic sense, do you think? And this is a slight departure from the sort of things we normally talk about. I don't know if any of you have an opinion. Gemma?
I should say I don't know the answer, but I think it seems to me there's a question about what do you think the free COVID tests are doing for us? So are they about understanding the prevalence of COVID in the population as an early warning sign to the need to reintroduce further restrictions? It doesn't seem to me that's what they're doing. So is it about encouraging people to stay away from others to reduce the spread of the disease? that seems more likely to be what they're doing at the moment, but I haven't seen any evidence, and presume the priority for the government ought to be gathering the evidence to understand actually how much impact does that have on people's behaviour and on the spread of the disease. That seems the crucial question to whether or not it's really worth spending the amount of money that we are on free tests at the moment.
Actually, another related question is whether it's a false economy to stop funding some of the surveys that looks like are going to lose their funding. But does anyone else want to chip in on this? No? Okay, we're going to come back to Brexit. And there's a question on regulations I want to come to, but I want to put to you a couple of more political questions. The first is about this story doing the rounds today that the Chancellor viscerally hates. He doesn't just hate, he viscerally hates the Office for Budget Responsibility. And I suppose, one question is, what do you make of this? The other is, the hints at this in this story, certainly as I read it in the Times, that the reason for this is because of a sense that the OBR has overstepped the bounds and started going beyond its remit. What do we make of this? I'm going to turn to you first, Jill.
I don't think there's much evidence that the OBR has overstepped its bounds, but it has clearly sort of shed some uncomfortable light and produced some quite compelling graphs that have been widely tweeted around. And you can sense that, the OBR has got in a day before the IFS and the Resolution Foundation, because obviously the Treasury has to give its numbers to the OBR in advance. I think it's really quite important, though, to understand where the OBR comes from. The OBR was a sort of the 2010 George Osborne response to the fact that Treasury forecasts had been deemed to be relatively incredible. We used to always have this thing in the Treasury when the forecasters who sat in the Treasury would produce their fiscal forecasts, and the Chancellor didn't really like it. And we had this very odd terminology when I remember arguments between Ken Clarke and the Treasury, when Ken Clarke would say, well, I'm not having growth like that, I'm going to have growth at this. And then the forecaster would say, well, that leads you to a completely implausible path for growth in the whatever quarters. And Ken Clarke would then say, well, I don't believe the first quarter growth figure, and the ONS always revises it up. It's probably the CSO back then. And we'd have all these things. But we always use this term and phrase, they were the Chancellor's forecast. The point of the OBR was to take that out, give some additional credibility to it, and actually give credibility to what the Chancellor was saying about his path for debt reduction, stuff like that. I think if you look at objectively, the OBR, if anything, has been a bit over optimistic. It certainly hasn't sort of dissed the Chancellor in a way. If you had any criticism of the OBR, you might say it takes government policy too much at face value. It's invariably scores that a Chancellor somewhere, sometime, somehow will increase fuel duty, yet the very clear revealed preferences of Chancellors since 2009 is never to increase fuel duty, we actually had a fuel duty cut. But I think what happens with arm's length bodies, and the OBR is what we call an arm's length body, is when they have their first setup, they're set up by somebody who came up with the idea, understands why they're doing it, and realizes that for their credibility, they're going to take a few brickbats. And they appoint the first chair. And that's what happened with George Osborne and Robert Choate. Then over time, the sort of folk memory of why did we ever land ourselves with this sort of inconvenient beast diminishes. And you get onto your sort of, second chair, the difficult second chair issue, which we now have with Richard Hughes, former Treasury official. So it must be very galling for the Chancellor to be told what he thinks by a former Treasury official. It's really annoying. That guy should be advising him, not calling him out and appearing on platforms saying that the Chancellor's plans mean X and Y. So I think you've got that sort of thing. But I think if the Chancellor really thinks this, then he's showing himself not to be a sort of serious player. He should understand, I think, the benefits that having an independent fiscal watchdog, and lots of other countries have them too, brings to the UK, brings to the credibility, brings to actually helping him in convey some quite difficult messages rather than undermine them in this way. And I think that if this really has come from the Chancellor, I think it reflects quite badly on him.
You're getting invited back to this panel, Jill, just so you know. Any other former Treasury officials want to chip in before I go to Ben?
Well, I mean, I agree with everything Jill said. I mean, and I did find the reporting very odd in that, what the Chancellor clearly doesn't like is not that the Richard Hughes of the OBR has said, oh, the Chancellor should have done X. It's the fact that, as Jill says, the OBR is producing graphs and charts which contain their forecast and their analysis of the Chancellor's policies, which is frankly their job. I mean, I think, as Jill said, that's what happens when you create independent bodies, that you forget why you did it, and then you get annoyed when they tell you things you don't want to hear. But that is precisely what they're there for. And I suppose in some sense it's a sign of success.
Ben.
Well, as a member of an institution that's earned its fair share of anonymously briefed ministerial annoyance, I can say to Richard Hughes and co, welcome to our world. I watched Richard Hughes, Andy King and David Miles at the Treasury Select Committee hearing this week. I heard them repeatedly say that's not a question that you would expect the OBR, anyone representing the OBR, to have an opinion on. Kept coming up and again. I don't buy this idea that they are pushing a normative agenda in the slightest. I think they're extremely careful about it. And I would just say this about the OBR. They've been an absolute godsend for journalists, and not because they push their own views, but because they present information in the clearest, easily accessible way of any of the institutions, whether it's the Treasury, the Bank of England, you name it. They are head and shoulders, in my view, above the rest. They're a great institution, a great economic institution, and it would be folly, in my view, to do anything to undermine them in any way.
Okay, excellent. I've just one more slightly political question before we go back to bonfires of regulations and maybe talk a little bit about Brexit and its impact. So the sort of more political question is, for me at least, I'm always surprised that chancellors seem to get these things wrong. They seem to misunderstand or misjudge the reaction of their backbenchers. They seem to be taken aback by reactions of economists that they seem not to have predicted. Is this just because of a sort of political naivety? Is it because the process is wrong? Is it because chancellors just don't talk enough to other members of their own political party? Why is this? Why should Sunak's spring statement have gone so badly wrong? Couldn't you have planned your way around this? If the answer is you're just being ridiculously naive, Menon, then you can say that as well. But I mean,
okay, Anand, you're being ridiculously naive. No,
thank you very much.
I'll talk a bit as an insider about what goes on in the budget process and why you are always on tenterhooks. We used to, when I was press secretary at the Treasury, or indeed in the Chancellor's office, we used to wait with bated breath until the first edition of the Evening Standard. This was the old days, guys, no social media. We had to wait for watch the budget coverage. What are people saying about it? The Treasury is still very wedded to keeping this process incredibly internal. And I think what that gets you, the big risks in that is you become victims of your own internal deliberations. You've been through a long process of talking to yourselves, and it's still quite a closed circle of quite samey sort of people, of working through the options, rationalizing to yourselves why you're not doing things, discarding some, accepting others, and you're just not in the same place as really anyone else. You might then find that we heard that Rishi Sunak on this, until really quite close to the time, was hoping to do a very minimalist spring statement, something that actually at the Institute for Government we've argued for, that the UK doesn't help itself by having 2 or more fiscal events a year, that actually you do much better to have one big fiscal event rather than have loads of mini fiscal events. But so he may have had to do some things quite at the last minute with a very changing position as expectations and the politics change. Mm-hmm. But the real problem is you are not starting from anywhere near the same place as everyone else, I think, when you do it. So you're sort of springing it on a really cold public. You may have done a bit of kite flying. We have this I think, appalling ritual of the Chancellor doing a bunch of meaningless interviews on the Sunday before. And I cannot see why the Sunday programmes book the Chancellor to say totally uninteresting things, as opposed to saying, well, actually, we have a programme next Sunday as well. Would you like to come and talk about your budget or your spring statement after you've told us all what's in it, so we can actually ask you some questions about it, rather than for you coyly just to say, well, I'm not going to talk about tax decisions there for my spring statement. So we get this sort of pointless thing. And I think this is really why you do that. I mean, we saw it a few years ago with Philip Hammond, when it took Laura Kuenssberg, I think, to point out to Philip Hammond that his nick change appeared to breach a Conservative manifesto commitment. If the Treasury was a bit more open internally about what it was planning to do, these things aren't very secret. They aren't actually desperately market moving or anything like that. There are some things with risks of forestalling, but most of it doesn't have that sort of risk. Then actually the Treasury put itself in a better position, and it gets too bound up in its own internal processes. And I think that's why it keeps on getting cold. It is a good argument, I think, some of the things about actually having a more diverse set of ministers, officials, more diverse experience, whether having some of the Treasury based up in Darlington is going to make a big difference. We wait to see. The head of tax and welfare, the DG tax and welfare, is actually the most senior Treasury official sitting in Darlington. But I think that's why you get caught out time and time again by these things which seem sensible. We saw David Cameron talk about omnishambles budget, saying all the attention was focused on whether to do a mansion tax, whether to cut the rates, how you're going to cut the top rate of tax. No one noticed that these other things might blow up in their face. That's the other thing, is there are lots of little mini landmines in these statements, and you never quite know what is going to go off and explode in your face. When you look at that long list of budget starters, you just can't tell where the risks are, but you don't make it life at all easy for yourself by the process you put yourself through.
Thank you. Gemma.
Just to add to what Jill said, I mean, two other things. One is that this Chancellor does seem to be really desperately trying to avoid doing anything through the benefits system. And I don't, for reasons that haven't been sort of spelt out, but if you look at the set of policy measures announced in February, for example, to help with energy bills, they really tried hard not to give money out through the benefit system, instead using council tax and energy bill rebates. If that's right, then that's sort of constraining your policy action in quite significant ways in kind of how and who you can help. The other thing I wonder, and sort of where did the Treasury go wrong in not understanding the sort of pushback they might get around particularly the lack of help for lower income households, is whether they sort of missed how the sort of what's going on in the economy and existing policies were affecting that group, and were too focused on what's the impact of the new policies that we've announced. So the reason I say that is, if you look at the distributional analysis that people do of the new policies that are coming in this April, so taking the council tax rebate, the energy bill rebate, and the various spring statement announcements, that actually looks quite progressive in the sense of giving a bigger percentage increase in incomes to lower income households, and then higher income households are paying quite a big tax increase through the NICS rise. So those new policies look quite progressive, which I wonder whether the Treasury kind of thought, well, that looks all right on a distributional side. That sort of ignores the fact that the inflationary hit is hitting lower income households more than higher income ones, because they tend to spend more of their budgets on energy, which is what is rising in price very quickly. And also the fact that existing policy, and particularly the way that we operate benefits, is meaning that those lower income households are also facing a bigger real terms living standards hit this year than middle and higher income ones are, because by default the benefits are going up by last September's inflation, which was only 3%, rather than the inflation we actually expect to see this year, which is more like 7%. So I just wonder whether that might have lulled them into missing the kind of net effect of all of these things on different types of households.
Interesting. Ben, you wanted to come in?
Yeah, great points from Gemma, and I was really interested in Jill's inside of you. If I can just offer a slightly outside of you, the media view about why these budgets sometimes get into trouble and they don't see it coming. There is an element, or can be an element, of randomness in it. Remember the pasty tax. very small item, wasn't raising much revenue at all, but became this great cause célèbre. It's quite possible that if a journalist, a news editor, whoever had not picked up on that and decided to make a thing out of it, it would have just sailed through, and that would have, we would have a higher rate of VAT on hot takeaway food. So don't underestimate the extent to which it can be just a random thing that gets picked up and becomes, as I say, a cause célèbre. And there's a herd mentality in the media as well. They go out, they hunt in packs. When there's a sense that this part of the budget wasn't working or was bad, people do tend to pile on. So maybe it's a bit of a defense for Treasury that you can't possibly predict something that's as random as that. Although I do agree that there are big structural things that they do perhaps miss for all the reasons that Gemma and Jill have outlined.
Interesting. Jill, did you have a pasty point?
I think there is a sort of busyness penalty, which is the pasty tax as an example. You do lots and lots of small measures. When I was in the Treasury, we used to go on what was deliberately termed a lollipop hunt, which was, where we would go and try and find tax measures that we could put in the budget with the sole aim of making sure that when the FT did their massive coverage, there was some interest group somewhere that would welcome the measure. And the Treasury does this thing where it calls up people, in the aftermath of the budget. Something good is coming when a Treasury official says, will you be available for a call from X? Straight after the budget, because they're about to ask you to put out a welcoming statement of something that they've done. What they don't seem to do quite in the same way is a sort of proper elephant trap hunt. You get a bit of it. In my favourite bit of the budget process in the Treasury is when Treasury officials really get to say what they think about the budget, was when they do the questions for the Chancellor, where you get things like, isn't your move to do X a sort of venal giveaway to your donors and things like that? And you can really, really see when you do that, I don't know whether they still do, what Treasury officials really think of some of the budget measures. And then you give the Chancellor a sort of feeble answer to fob people like Ben off with. But I think there's probably not enough sensitivity to actually working out where that was. It's really interesting on the ham and nick increase. The moment you spotted it was going wrong was when lots of journalists on Twitter started realizing it was applying to them. And I think Greggs were always going to spot the pasty tax and make a fuss about it, Anand.
It was the making of Greggs, wasn't it? That particular campaign. We have got a whole load of different questions in about regulations, and they're sort of slightly Brexit related questions. So questions ranging from, are there real opportunities in new and emerging technological sectors? What are the opportunities for doing regulation better? Is there going to be a bonfire of regulations? I'm sat next to Joel Roland, actually, and I'm just putting in the Slido chat for those who haven't seen it. The latest version of our divergence tracker came out this morning, and some of these issues are touched on in that. But as far as we can tell, and I mean, to be fair to government, they've been distracted by an awful lot of things. Where are we heading in regulatory terms with our new regulatory freedoms? We've got the Brexit opportunities paper, for whatever that is worth. We've had lots of statements, not least from ex-Minister Lord Frost, but is there a discernible direction of travel as yet? And what might the economic implications of some of the things that some ministers and former ministers have been talking about be? There's a whole load of stuff there, so you can take your pick. I have to point at someone. Jonathan, you haven't said anything for ages.
Well, I mean, I think on regulation, I go back to what I said before, which is the government's sort of lack of any sort of coherent economic strategy. There doesn't appear, there has not been a big push to deregulation. What we've seen has been very reactive on the whole. So we are now going to introduce a special act of parliament designed to get at P&O, right? In other words, a bit of extra labour market regulation. Now that may well in itself be justified, but it's sort of an illustration, the fact that actually, there's a lot of things wrong with the way we both regulate the UK labour market and that labour market regulation is enforced. But the government's approach to dealing with this has been entirely reactive. There's neither, despite the fears of some people that post-Brexit we'd see a desire, a move towards a properly American labor market with removing some of the protections that were dictated by the underpinning of EU regulation. That hasn't happened, but neither has there been an effort to actually address some of the big deficiencies that have emerged as we've seen, the growth of the gig economy and so on, which has illustrated that our definitions of employment and self-employment are just, from whatever your perspective are just a mess and need to be reformed. Instead, we get this sort of entirely short-term reactive stuff. So I think that's probably true more broadly, that there's no particular evidence of a sort of wider post-Brexit strategy towards regulation or towards what the goal, what is the role of government in shaping markets. Maybe I'm missing something, and maybe this will emerge at some point, but I don't get the sense that's there.
Yeah, I mean, I certainly agree. There's no ideologically coherent direction of travel, is there? Because even in those areas, take agriculture or whatever, where there has been some new regulation because of Brexit, it's not necessarily coherent across different departments. Jill, is your hand up? And then I'll come to you, Ben.
I mean, it's not clear that you necessarily do want to have a completely one-size-fits-all strategy across departments. You could say that in principle, there should be opportunities to regulate at the level of 1 or indeed 3 or 4, depending on the status of Northern Ireland. You should be able to tailor some regulation to be more suitable for UK circumstance if you're regulating for the UK than if you're regulating at 28, where you have to accommodate the sort of preferences and different preferences and different states of the economy of different countries. So you should argue that there is some scope for better regulation through that, though obviously then the price you pay is that you potentially impose the costs on business of meeting 2 different sets of regulatory standards. And as our report on manufacturing after Brexit made clear, most sort of manufacturers who export have a strong preference for one set of standards if they want to export into the EU. They don't have a preference for having to meet multiple different things, potentially different for small business. So there's a bit of an opportunity. We have seen a bit of a sort of strategic approach, I think, and that's in Joel's divergence tracker emerging from the Treasury on financial services, where the EU has taken the decision effectively to shut the UK out of the EU's financial services market by denying us equivalence decisions, open brackets, pretty unjustifiably, close brackets. But anyway, and the Chancellor is now striking out and trying to do things differently and set up the UK as a global centre. So there's a bit of strategy coming out there. It's quite a long run task. The one thing I would say is that we have been through attempted bonfires of regulation under successive governments. They always overpromise, they always massively underdeliver. You end up in numbers counts where you basically get rid of a whole bunch of regulations that actually are mostly pretty zombie regulations anyway, maybe good for cleaning up the statute book, not much good for anyone else. There's no great consensus about lowering standards, even within the government, and certainly not within the government supporting coalitions on things like lowering environmental or labour standards, which is potentially where some of the sort of bigger, if you like, economic benefits are. But the important thing to remember is that most regulation is actually introduced because the benefits exceed the costs. So you can't just look at one side of the equation. All these bonfire processes tend to focus on the cost of regulation and ignore the fact that you are actually benefiting from cleaner air, rivers that don't need cleaning up, or whatever, and those sorts of protections. So I think it's interesting. The other bit is, even in these forward-looking areas, the UK may be able to strike out on its own. But ultimately, there are 3 big regulators in the world, the US, China, and the EU. We may be able to have some sort of London effect where we influence the shape of their regulation, but those will probably ultimately determine the shape of future markets.
I imagine there's some nervousness around some boardrooms about the prospect of a fast-track mechanism to change or get rid of retained EU law, because that just looks like and feels like uncertainty, doesn't it, for many businesses? But anyway, we can come on to that after. Ben, I know you had to. Gemma, I don't know where you're sitting, but you're sat in the most fantastic halo of sunshine there. It's brilliant. Ben.
Yeah, I mean, Jonathan mentioned P&O, and I think it notable, if not surprising, that the sort of the Singapore-on-Thames Brexit thing, the free market, people who wanted to deregulate, for sure, Brexit opportunity to deregulate haven't said anything about that. I mean, it's not surprising because of the way the company is behaved, but also because of where public opinion clearly is on this. And I think public opinion is a big player in this debate about deregulation, about the way Brexit is going to work out. We can't, if people aren't signed up for it, it's not going to happen, however ideological certain members of the government might be. And on that subject of the Singapore-on-Thames wing of the Brexiteer opinion, it seems, as you know, Anand, that the locus is now on, from people like Lord Frost, is on, let's not impose full controls on stuff coming into the UK, on imports. That seems to be the sort of the big Brexit opportunity they see at the moment. So we'll see how that goes. But what I would say is, think about public opinion on this. Are people who would just take one dodgy consignment coming into the UK for people to say, well, hang on, we didn't sign up for this. So I think this is, as I say, public opinion is really, really important. It comes to the whole regulation agenda.
Yeah.
As Jill says, it's, costs and benefits, but it will be public opinion which weighs those costs and benefits in the end, I think.
I've always thought that paradoxically that Frost approach sort of just implied an enormous level of faith in EU law and EU surveillance mechanisms, because what we're saying is we don't need to check stuff coming in from the EU because basically their stuff's safe. I imagine it'll be different for non-EU goods coming in, but I mean, there is something of an irony that the biggest benefit of Brexit is not policing our borders, given the referendum campaign that we had back in 2016. I don't know, Gemma, you don't have to if you don't want to, if you want to. I mean, and then there's a whole host of different stuff. The last one, I think, because we're about to run out of time, on, as we move forward, will the broader economic impacts of Brexit become clearer? Will they become more politically salient? Is there worse to come? Is it just going to be a sort of steady drip that is essentially invisible to public opinion? How do you expect that to play out over time? I suppose a lot hinges on whether we put those checks in place.
Well, I mean, I think what I would guess is say that on the whole, it is going to be a steady drip. I don't think there's going to be one sort of big moment where something happens and suddenly everyone realizes, oh, this is what Brexit means for good or ill economically. The slow puncture theory still remains the central case. But that doesn't tell you what will happen to public opinion or to elite opinion and hence towards policy. It doesn't mean that it will be imperceptible, because I think actually there are some, or the opinion polls do suggest that despite the fact that there hasn't been one big event, that people do generally actually realize what as you said at the beginning, both common sense and economics tell us, which is that making your trading relationships difficult with your largest traded partner is, all other things being equal, likely to do you some economic damage. And the majority of the public realize that, whatever their views on the sort of other political or sovereignty aspects of Brexit. Now, whether that leads to, over time, the political elite, as it were, deciding that this is sufficiently significant so as to justify a significant change in policy and an attempt to either renegotiate the TCA or take a radically different approach to how it's implemented so as to reduce some of those barriers, that I think it's impossible to predict at the moment.
Jill, do you want to?
So I think there'll be a difference between the perceptions from people who experience sort of acute Brexit, so people who are trying to get things over borders, whose businesses have effectively been put out of business, or their business model wrecked because of Brexit, and the rest of us who will it'll just sort of fade into the background, unless, of course, there is a big flare up. And remember, the big difference because of Brexit is that our trading relations with the EU are no longer governed by our right to be a member of the single market and all those protections. It is now dependent on both sides accepting that trade and cooperation agreement, and that does have potential for big flare-ups provoked by either side. And we saw a bit of that last year over the French fishing licenses, And we have a sort of potential sort of big flare up with a review when we look at fishing again in a few years, and when we look at the whole TCA again in a few years, and the rebalancing mechanism. So this could blow up, and we could find our trading relations with the EU change quite radically.
Gemma, would you like to? About 1 minute left.
Only sort of reflection on Jill's answer is, I guess it. I agree that that's kind of where it'll flare up. It's not clear to me which way that sort of means public opinion responds. That may well be a catalyst for people thinking, oh, well, it's the EU's fault for being so mean to us in this arrangement, and therefore it was a good thing we Brexited, rather than that suggesting that, well, if we'd been in the single market, this wouldn't have happened.
And it is one of the things we tend to forget. We look at the polling that says, you know, how many people think the government is handling Brexit badly. In most of the polls I've seen where they ask the other question as well, more people think the EU has handled it badly. So I think, you know, it's not necessarily a straightforward thing. My clock has just ticked over to 1:45, which means we've run out of time. So on that note, can I just thank you, Gemma, Ben, Jonathan, and Jill. I thought that was utterly fascinating. I actually understand some of these things a bit better than I did when we started. So thank you very, very much for doing that. I hope we can see you all again in a few months' time when we reconvene and discuss whether you were right or wrong, as we rather meanly did this time. But for the meantime, thank you all for joining. Do sign up for that economics conference, the link for which is in the Slido, and we will see you all soon. Enjoy the rest of your day. Enjoy the snow, Christ. Take care.